Welcome to Freed on Business. He grew up in South Florida, has been in business here since the early 90s, and has closed over $3 billion in deals. He's seen it all. He always has an opinion, and he's always ready to share it. Informed, entertaining, and connected, he has his finger on the pulse of South Florida's business community. He's Jim Freed, and this is Freed on Business.
Oh boy, am I excited tonight. I have a good friend of mine on today, Jon Gitman. Jon is a leading finance person with BridgeInvest. He's president, chairman, big shot. Sorry, Alex Horn. Jon Gitman's the man at BridgeInvest for me. So we're going to talk about this. Jon approached me about 10 days ago about, hey, how do I get on the podcast? And I, of course, said, you just did. So I want to remind everybody, this is Freed on Business. We're going to talk about creative capital market solutions. It's episode 792. And welcome to the show. Remember, we're streaming live on LinkedIn, YouTube, Facebook, Instagram, and my favorite one, Twitch. I don't even know what Twitch is. Have you ever watched Twitch? If you're a gamer, you have. Now, remember to follow us or look for us at Freed on Business or at Jim Freed. And of course, today is our guest, Jon Gitman of BridgeInvest. I want to take a second and mention our good friends at Warren Henry. The show's been on for, gosh, I think this is our 15th or 16th year. I forget. Warren Henry's been on basically at this point since the beginning. Thank you to Larry, Warren, Eric, Ismet, my whole Ronaldo, my new service person, all the people at Warren Henry. I love them all. Thank you so much for helping us bring this incredible content and Larry's friend from probably elementary school or something, Jon Gitman, to the show. And here we are. Jon Gitman, there he is. What does it say he is? He's a partner at BridgeInvest. What's a partner at BridgeInvest do, Jon?
That's a really good question. I have no idea, Jim.
That's already the best answer you're going to give. So welcome to the show. Jon, where's Alex?
Alex is the original founder of BridgeInvest, for those of you who don't know. He's actually down in Brazil, capital raising right now.
I love his dad. His dad's a big mocker at the shul in Coconut Grove. I see him in all the big holidays. He's a wonderful person. I must have met him, 35 years ago or something. So tell me a little bit, we teased the show that it's going to be about current capital markets. BridgeInvest is a lender that's grown. Congratulations to you and Alex and the whole team about growing your profile and your footprint. Tell us a little bit about what BridgeInvest does, where you do it, what you do.
Just before I answer that question, for those of you that don't know, this is Jim's 792nd show. And at first, I was actually quite upset that I didn't make it for number 800. But then, speaking of shul, I actually did the math, and 7 plus 9 plus 2 actually gives you 18, which is a lucky Jewish number that means life. So I'm not number 800, but I'll take that as a good sign.
I love you,
I
Jon.
thought that was interesting.
Keep pushing. You may be on show 800. You never know. That's always something we're always looking for. Right now, I won't tell anybody what the show 800. But I think you're earning your way onto the show, Jon. So listen, tell me, when I first met you and Alex, BridgeInvest was a local company. They were doing a couple of loans here in South Florida. Boy, have you grown. Tell me how much money you put out, where you put it out, and tell me a little bit about the structures you offer today.
Yeah, so to Jim's point, so I joined BridgeInvest in 2013. At the time, the company was about a year and a half old, and I think our whole portfolio was less than $50 million at that time. These days, our smallest loan size, we try to shoot for like 25 million and up. Our current loan book is just a hair under $1 billion in active loans right this minute. And we're sitting on almost another $1 billion of dry powder. So our hope is that, by the end of 2025, based upon originations, payoffs, et cetera, we're at least $1.5 billion in active loans. We've done, over two and a half billion loans over our time, over sort of the course of the business here. And a lot of that has really been over the last 5 years or so. So we kind of had a slow ramp. We really built out what we think is a great infrastructure and a great team. And, once we had that, then we really sort of pushed the gas pedal and started growing in terms of raising more capital in originations and, feel like we're doing it in a sustainable manner with a good credit quality in our portfolio.
So we gave a shout out to Alex and his pop. Let's give a shout out to some of your team. Where do you only have an office in Miami? Where are you located now?
So we have like just over 30 people. Most of them are in our headquarters here in Coconut Grove, Florida. We have one individual up in the New York area. We have one individual in Dallas who does originations. And we're actually very likely to hire someone on the West Coast as well now as we continue to sort of expand our capabilities.
So what's your general property type? What kind of situation do you like to go into? Everybody makes real money when they solve a problem. What type of problem do you solve? And what is the cost of your money today? What's the structure look like?
Yeah, so I think you can break our program down simplistically into two buckets. We kind of have our traditional bridge and our like specialty bridge, right? It's like high yield special situations. Um, the latter is usually for ground up construction, pre-development, like i.e. land lending, or special situations, which are usually quick closes. We've closed the deal as fast as like 3 days. I wouldn't say that's normal, but we can certainly get things done in, a couple weeks, which is pretty fast in the commercial real estate world. That bucket of money is like 10 to 13% in terms of interest rates, depending upon the deal. Obviously, I think what we're solving there for, probably the bulk of that does fall into construction, where we're an option where you can get non-recourse financing at pretty good leverage point as well. So the customers like that because, it sort of limits their amount of equity that they have to raise or put into the deal. And also, they don't necessarily have to put, their personal guarantee behind it. So that's kind of the high yield bucket. On the traditional bucket, which is the vast majority of our current focus, and where we've been raising the most amount of capital lately, rates sort of probably go down into like the sevens, but are typically kind of around 8. And there we're doing really your typical value add deal. These are usually existing assets that have either a renovation or a lease up or some sort of tenant rollover that you need to deal with before you can sell or go to like the permanent financing markets. And types of deals vary widely. We're always senior mortgage lenders, but we'll do a pretty wide variety of deal types and stories. The one thing I will say is that what makes the most sense for us is it's usually deals that are right outside of like the perfect credit box, right? So when you have a deal that's a quote unquote like no brainer, I like to say, usually what you have happen is you just have a massive amount of competition for that deal from the lending community. And quite frankly, I think people just like it's a race to the bottom. And you take what's a great asset and do a bad loan, right? Because it's doesn't have enough structure in it or the rates are too cheap or whatever it may be. So what we look for is like what's right outside that box where you can lend on a really great asset to a really great sponsor, but maybe not every single person is chasing after it. And the arbitrage of the loan itself and the investment that we make is like the best risk adjusted return. That's what we look for.
Wow, I feel like a high net worth investor sitting on my couch listening to a pitch in Brazil. I wrote the next submission down on a little yellow sticky. I got a call from somebody who has a problem who apparently doesn't know you. So God willing, I could do a little information arbitrage there and make a couple of points. Jon, tell me a little bit about yourself. Why would I do business with Jon Gitman?
Well, it used to be more fun, but two kids and a lot of gray hairs and maybe 20 pounds later. I'm not sure if that's true anymore. But look, I really give credit to, Alex and maybe even Alex's family who, were part of starting this company in terms of, the culture and the ethos of what we do around here. It's funny because we're sort of younger guys in the grand scheme of things. But I think we do business in sort of an old school way. We try to be very honest and transparent. Like we'll tell you what we can do. We'll tell you what we can't do. And, 90+% of the time we're executing on what we told you. Things happen, but the lending business has become very bureaucratic, and we borrow money ourselves, so we see this too. It's just become difficult, and there's not a lot of transparency anymore. And I think that just being able to work with someone who just tells you the truth and tells you like it is, and tells you what the real problem is, because then you can go solve the real problem, right? And I think people really appreciate that when they work with us.
What I really appreciate is you pick up the phone and return phone calls. That's number one for me. If you don't return a phone call, we can't do business.
Yeah, that's fair.
I love your team. Everybody that I've ever met there is wonderful. And yes, I can vouch for the fact that you project the value system of your founder and your founder's family very much so. They're lovely people. And so in the world where there is a choice, and while bridge lending is a category that many private family offices want to get into, you guys really are successful because of your system and your team. You're taking these risks outside the box. Things happen. What happens when something happens? How do you behave when somebody's behaving but the market isn't?
Yeah, I mean, look, for better or worse, we've had issues to deal with over the past few years, just like other lenders. And I'll tell you that I think that investment strategy of sort of like staying away from like the herd mentality trade has really saved us, because the problem is, like, if you were in multifamily investing in 2020 through 2022, like no matter what you did right, you did a bad deal, because cap rates and interest rates were just unsustainably low. And now those deals look bad. And it was really difficult not to get into that herd trade, because people were doing billions of dollars and making millions of dollars on this business, right? So it's difficult not to fall into the hype. Look, ultimately, from the workout side, what we do and we've learned is you have to be tough, but you want to try to work with people, because the owner of the asset has really strong incentives to ultimately pay you off and save their money, save their investors' money. So we've certainly been surprised with what people have been able to accomplish in terms of our sponsors in tough situations. So you want to give them the rope to succeed, but also, like, you need to make sure that they understand that this is, we're ready to enforce our remedies. And you have to actively asset manage. I mean, I can tell you numerous situations where we've gotten involved in a deal, like we've effectively taken it over. And despite the fact that, we're a lender based in Miami, we've operated all kinds of assets all around the country better than the sponsor can. And it's for different reasons and whatnot, but you have to be ready to implement that hands-on asset management.
We're going to take a quick break here. We're going to give a nod to Larry and his team at Warren Henry. We'll be right back with the big takeaway that we have from speaking with Jon Gitman. He's a partner at BridgeInvest. This is the part that I really love. Mr. Mendoza, take it away. Now I'll tell you why I love it. Mr. Gitman probably already got it. I love it because it shows all the deals that I've done. I'd like to thank our friends at Warren Henry. They've been with us so long now, for 12, 13, I don't know how many years at this point. I want to thank Larry Zinn, Eric Day, the whole team over at Warren Henry. Whenever I go over there, Ismet, Jack, they all treat me like gold. Ronaldo, my service person, my new service person, took over for May. They always make me feel like family. I go to their store at 151st and Biscayne, where they sell Land Rover, Range Rover, Infiniti, Jaguar. Now they've got this gorgeous new line for Lincoln. It's great stuff. up in Gainesville. That's where I'm going to get my fancy Audi. They sell Audis up in Gainesville. I go there, watch the football games, and go check out the cars. I love the people up there. They're wonderful. They've got a big store down in the Keys where they've got all kinds of pretty much every brand down there. They've got their award-winning Land Rover Range Rover store in South Dayton. Of course, their Land Rover Range Rover store, the newer one out in West Broward. Whenever you go there, they treat you like family. They've got the Warren Henry list of services, the Warren Henry Advantage, all kinds of great things. Like when I take my car in for service, I can get a loaner. Yesterday, when I got my car back from service, I couldn't go up there, so they made sure that they delivered it down here for me. They keep an eye on what's going on. They do great customer service. Join me, my mom, my beautiful wife Vivian. My wife Vivian loves them because they treat everybody like gold. My wife is really special, though. They treat her with extra special hand. They actually treat my mom pretty special too. She's an acquired taste. But remember, always the best price, always the best service, always Warren Henry. All right, we're back with Jon Gitman. He's a partner at BridgeInvest. They deploy capital across the country in well thought out real estate transactions as a lender. Do you ever do anything as an equity partner, pref equity, or just mezz financing?
Can I make one plug for Warren Henry?
Go ahead.
I was not expecting this, but we just got just got a range from Warren Henry a few months ago, and for my wife. I've bought my wife jewelry, watches, diamonds, you name it. She did nothing. I get the most thank yous for that Range Rover. Like every time it rains, she's just like, this is the best car. You just got to figure out what your wife actually likes in life, because I've probably spent tons of money on stuff I never should have.
I get the same response for my wife's car too. She loves I got her the Infiniti. She's got the new Infiniti QX60. It's just tremendous. I drive a Q60. I think it's their last sedan. And every time I take it in for service, the service people try to buy it off me because it's got really low miles. I treat it like gold. I get it all serviced there. They know exactly what it is. They spin it up just perfectly. So, Jon, I want to get our last takeaway here. And in this case, I'm going to ask you something. It's in the paper today. What do you think rates are going to do? Obviously the election's a wild card. People say, I don't really think it is. I'll give you my answer after you give me yours.
On the election, look, obviously there's a lot of issues. I ultimately agree. I think that there used to be a much bigger political divide between the two parties. And I think that when it comes to fiscal policy and economics, they've really converged to the middle a lot more than people really believe. So I agree with you on that front. Interest rates. Short-term rates will go down. How fast, how much, anyone's guess. I'm not going to prognosticate on that. But I think this is talked about way too much in our business. Yes, if you have a short-term loan, your short-term interest rate will go down. It's not going to go back down to zero when you did all those deals that are now in trouble. It's going to go down to 2 or 3%, right? But here's the thing. Real estate is ultimately a long-term business, which is affected by long-term rates. And I think the reality of the matter is that when you look at the 10-year, I don't think it has a lot of downward movement to go. I mean, some, 50 basis points, 75 basis points, but not a lot. And I think people just need to be realistic that if you're doing deals today, you need to be thinking that your, long-term debt and long-term values are going to be based upon a 3-4% 10-year treasury. But, people really like to talk about the Fed. It's a hot topic.
Yeah, I don't really think rates are going to get down much. We can diverge here, but it's all about discussions. I really think that you're going to see rates go up. I think that rates will go up because either party. One is going to crowd it out with a bunch of tax cuts. The other is going to be perceived to be crowding it out with a bunch of spending. So I really see the long-term treasury is stable, floating upward, and I don't think you're going to see an inverted yield curve anytime soon. I think it's going to just stay like this. But John, I want to thank you so much for being on the show today. I want to compliment you and your partners on building an amazing company. I know that the high net worth investors that provide you with the gasoline for your fuel, your rocket fuel, I'm sure they're thrilled with your business approach and what you've been doing. I want to remind everybody that if they missed today's episode, they can check us out as a replay on any of my social media: LinkedIn, Facebook, Twitch, Instagram. We don't do X. X is unusual. They don't do that anymore. It's not supported. You can look for me at Jim Fried, at Fried on Business. You can head on over to the at Jim Fried YouTube page. I love saying that. We're on Apple Podcasts, Spotify, anywhere you listen to your audio, and check us out. All of our past episodes too. I want to thank our sponsors, Warren Henry, and of course, the University of Florida Center for Real Estate Studies. I get great contacts from there. I was just on with one of the people I met at the UF conference last year. I pledged to see them again this year. I love mentoring the students there, and I know that John is going to get his next hire at the University of Florida Center for Real Estate Studies. And remember, I want to remind everybody, the person that wants, oh, this is just for you and Alex, John. The person that wants, oh, this is great for you. The person that wants to do something finds a way. The other finds an excuse. Now go out there and make it happen. John, stick with us in the green room. God bless you. God bless the United States of America. Mr. Mendoza, the rest is yours.